What's up guys, welcome back to another video. Today we're talking about the holy grail of all business. How the billionaires make their billions and how people consistently make money no matter what they're doing. That is passive income. It's when you can go to bed and then wake up with a little bit more money than you went to bed with. The whole idea of passive income is that your money is making money so you don't actually have to go and work for your money. And then once your money makes enough money for you, then you'll never have to necessarily work again. Your starting point really doesn't matter in this video, and I wanted it to apply to everyone. So if you have $0 in your bank account, you might want to listen up because this can really help you. These are all ways that you can start making passive income immediately. And the reason why I did that is because after watching this video, I want you guys to go and start on your financial freedom. I wanted to focus on easy ways that you can make passive income that everyone can understand and everyone can set up almost immediately. Don't worry, we're not going to be talking about making any new business and collecting clients and management and all that stuff because that stuff is way too hard and I want you guys to be able to start making passive income day one. We're not going to be looking at any super speculative investments or get-rich-quick schemes.
And they all have the potential to give you 100,000+% returns.
Or pyramid schemes or anything like that. These are proven ways that you guys can make passive income starting today. The best thing about these are it's all scalable. So if you make $1 today, typically the next day, maybe you'll make $1.01, and then the next day you make $1.02, and eventually it'll just compound and compound until you're making enough money that you don't even know what to do with. And of course, if you haven't hit that like button already, just go and just gently tap it for me. Really appreciate it. And of course, just comment for the YouTube algorithms. And if you're not subbed already, what are you even doing? Jumping into number one, and this is dividend stock. So dividend stocks is basically you owning a small portion of a business. And if that business is cash flowing and consistently making profits, they're going to share that profit with all of its owners, which if you own some of the stock, you are partial owner. You're entitled to some of the profit by owning the stock, and they will pay you out quarterly, semi-annually, or annually, depending upon the company. These are typically very safe and predictable. And again, by owning the stock, you'll get paid by doing absolutely nothing. No matter if you go and buy the stock and just sit in a cave for 12 months, they will still pay you. You don't gotta do anything. It's a very safe and predictable way to make passive income, and on top of the dividends of the stock, you can also capitalize on the appreciation of the stock. Let's say you invest $1,000 into a 5% dividend yield stock. After that year's up, they would have paid you $50 just for owning that stock. On top of that, if the stock went up, you'd also capitalize on the appreciation of the share price. And of course, the price can go down, but typically when the price does go down, these businesses really try to keep their dividends and they really try not to cut them down because if they do, it really looks bad for the business. So typically, they try to slowly bump up their dividend as the business matures, and there's not too much risk in it. There's a ton of dividend stocks out there. There's stocks like JP Morgan that pays dividends, Coca-Cola, and then other stocks pay higher dividends, such as ExxonMobil and AT&T. Although you will be taxed at the ordinary income rate, so I highly suggest that you take that money and build that portfolio in some kind of retirement account as a tax shield, something like a Roth IRA or a 401k. So number two is index funds. And this is basically where you buy into the entire market. It's super safe, super predictable in comparison to a bunch of speculative investments, of course. The pros are that you're very diversified and it typically outperforms a lot of hedge funds. Ironically, so why would you ever go and invest in hedge funds? Doesn't make any sense, especially when they will kill you on fees. A nice thing is that these do pay a small dividend, although the real bulk of your money will come from the appreciation of the share price. You can expect an average from anywhere from 6 to 10% per year, year over year, and that's been pretty consistent for the last 100 years in the publicly traded markets. And again, they're low fees, they're super consistent, and they typically outperform all the hedge funds on Wall Street. Even Warren Buffett suggests that the majority of investors out there should just throw their money into index funds and just call it a day, and they will typically have more money than they could ever believe by the time of retirement. Number three are REITs, and REITs are real estate investment trusts, and I did make a video not too long ago on those, so link in the description. Really cool video where I explain everything that you need to know about REITs and how amazing they really are. So rather than buying into a direct company like Apple or Google, you're going to be buying into a pool with investors, and those investors are all funding these management teams. And the management teams then go and take the money and buy different real estate properties. That could be residential, commercial, farmland, you name it, they can get into it. This means that you are a part owner in a real estate portfolio, and they will give you money back through distributions or the cash flow that all these properties will be paying the, portfolio. The nice thing is you will just send them some money and then they will consistently pay you through distributions without you needing to do anything more. That means that you don't have to go and deal with any tenants. You don't have to go and buy anything for the renovations. You don't have to do the renovations yourself either. It's completely passive. You just pay for it and they will consistently bring you back profit. VNQ is an index fund that actually tracks these REITs. So if you wanted to get a little bit of a hybrid between the index funds and the REITs, go and check that out. I will say that REITs typically don't appreciate that much because they have to pay out about 90% of all profits consistently or else they aren't condoned a REIT. So they don't really appreciate that much, but they will pay you out very consistently. There's no real barrier to entry. If you have $1 and you can buy in with fractional shares through some kind of platform, you can get in today. And again, I highly suggest using these in a retirement account because of any tax sheltering that you can take advantage of. The cons are that you can't leverage your money as efficiently as if you were going and buying a house and renovating it and renting it out just the same, and you don't get as many tax benefits. Number 4 are bonds. And now there's different kinds of bonds. There's corporate, state, and federal bonds where you are basically the lender to that organization. These bonds will have a maturity date and a certain price that they will pay out on that date. It's up to you if you want to invest in them because the risk associated with these are very low, but the risk would be that they just don't pay you back. That's either if the company goes under and they go bankrupt and they can't pay you back, if the US government just explodes and then, well, you have bigger problems to worry about. These are very, very safe and they're very steady, and you already know how much you're going to be making before you actually purchase them. Something like a $100 bond that you buy for, let's say $95, will give you a 5% yield. The Vanguard Total Bond Index Fund is another hybrid between the index funds and the bonds, where this is an index fund that tracks the bond market. So if you wanted something like that, go and check that out. Some bonds are anywhere between 5 to 10% on the high side, although there are smaller ones that are like 2% or even 1.5%. Really depends on where you're lending that money to. Bond yields are kind of all over the place. They're typically very low because they're very low risk, although you can get higher yield bonds in more speculative companies. So something like Hertz on the verge of bankruptcy would give you typically a very high yield because you don't really know if they're going to be able to pay you back or not. And it gives you really quick liquidity in any downturns in the market. So if you're just holding bonds and then let's say March of 2020 happens, you can sell off those bonds basically immediately, take that cash, and then buy back into cheap stocks as you please. And number 5, and this one's a little biased, but this is going to be YouTube. Now there is a lot of work up on the front end. I definitely put hours and hours into making these videos, and these are taking hours and hours out of my life every single day through editing, filming, researching videos, you name it. It's very time consuming. It's more of an active business than a passive investment, although I really wanted to mention it because you can turn it into a passive investment. But again, I can't stress how much work goes into it. By learning the SEO and consistent uploads and editing, there's just so much editing. But if you stick with it in the long term and you have a built-up channel that has multiple videos on it and a backlog of these videos that are consistently making profit, then it can turn into a passive investment. I'm making money today as I am recording this video on videos that I recorded maybe even a month ago, and they pay me not too much, but they're consistently paying me. And the investment is in buying a camera, the computer. You can get a free editing software, and then the, of course, time commitment, and of course the skills, which you can learn all those skills in YouTube videos themselves. So definitely look around because there is multiple tutorials that are really helpful. You can make passive income if you have built up your channel enough, even if you never upload again. And again, this is not easy by any means, but it is a way to make passive income. Now, I will warn you, this does get very addicting, and once you start making this passive income, you're going to want to put every single dollar that you own into investments that will pay you very consistently. And I gotta tell you, once you go to sleep with a certain number in your bank account and then wake up that next morning with just a little bit more, that is like the best feeling in the world. And if you haven't already and you've stayed this long, of course, hit that like button, comment for the YouTube algorithms, and subscribe because you should. Good luck in the markets, and I'll see you guys next time.